actually make pizzas for parties and events and things like that, client appreciation parties, that is. And I enjoy it. And pizza is something that, brings people together, and, people have great conversations around eating pizza, watching pizza be made. And, I like it. It just kind of takes the whole customer service thing to a whole different level when I do a pizza party at someone's house because they purchased a new home with us. So we've actually done that together with Maura already in one of our buyer clients, and it was a great event. So I have been with Maura now since July, and looking forward to another great year.
Thanks, Ron. Oh, we did have an amazing pizza party and a client. So if you actually are lucky enough to work with Ron, he will like host a pizza party in your backyard after you close for your neighbors, friends, and family. And we had a great time. All the neighbors came to the last one he did in Lynn, and it was awesome. I actually had the best pizza there.
That's a homemade oven in the background as well. So that's what we bring to your house. Looks like something that NASA put together back in the 60s and 70s, but it makes some great pizza.
Thanks, Ron. So I'm Maura Allard. I have been in real estate. This is my 7th year. I started at Century 21 and I joined a team. I learned a lot on that team, which is why I wanted to grow one later on and after years in the business. Last year, I went to Keller Williams from Century 21 because they were focused on growing teams, and I was able to meet up with Ann and Ron, and who have the same values that I do as far as customer service and really putting customers first. And what I pride myself in is listening to the client and putting a plan together. I really want to hear what you want to happen, whether you're buying or selling. Where do you envision this going? And where I don't leave anything unturned. I ask all those probing questions, which I talked about, Steve does, about how the process is going to go. What is the time frame? If can you move in with other people if we don't find you a house? I go through the whole process with you. I just want to say, like today, Ann and I'm going to be meeting a new buyer that's coming up here from a different area, not familiar with Salem. And I took the time to write a list of places to visit in the email. And I actually had Ann do the same. So now she's got suggestions to go try Ledger, for brunch, and drive down to the Willows and explore Salem, and check out, there's the PBD Essex Museum. So, we really work with our clients to make sure that they're experiencing the whole process. And I think that sets us apart in a lot of ways. Fun facts about me. I love ice cream. I probably have a slightly addictive personality for ice cream. I eat it every Friday night religiously at Treadwell's, usually. It can be frigid, it can be snowing, it can be raining, it can be 1,000,000 degrees. That's where you'll find me on Friday night between probably 7 and 8 o'clock at night. And I also enjoy riding motorcycles out west with my husband when it's not a pandemic. So that's about everything for the panel. Before I try to get people to ask some questions, I wanted to do a quick giveaway. And if I'm going to announce the names of the winners, but you have to be here to win. So if you're here, why don't you say you're here in the chat, or make a little it known to me in the reactions. I'm going to give away, first off, a $25 gift card to Starbucks. My little bag says, I only have a kitchen because it came with the house. Oh, I know Marby's here. Marby, you won the Starbucks gift card, and I will get your address because I know you didn't register, but I sent you the Zoom link. So congratulations. I'll get that out to you, Marby. And someone's in the chat. Oh, Jessica's already saying she's here. And the next thing is, Steve Lewis mentioned that he had a little barbecue business, and it's called the Smoky Lab Barbecue. It's got a little picture of his lab, and he's generously donated a $50 gift card. So let's see. I don't know. Is Ignacio here? I don't think I saw an Ignacio. Is Florence here? No Florence? Okay. We'll just keep, I know Jessica's here. She already told me. Oh, Walter Hartford. Walter's here. Walter, you won Steve's gift cards for some barbecue. So
All right,
Marty,
Walter.
I know. Well, there's a Walter Hartford. I'll send you your
That's
gift card.
awesome.
I know. And Marby, I'll send you your gift card as well. Okay. I wanted to open it up for questions first. You know, if nobody has questions, then we'll go along and we'll start to probe you for some questions. But does anybody have a question they absolutely like want to get off their chest and answered? Buying, selling, general real estate questions.
Maura, I'll give you one.
Thank you, Walter.
So I had a client who just sold a house, and she got $80,000 over over the price that she had listed it for. Is that common? And then how does that work for you and Steve? And how do you navigate the current market for clients?
Yes, it is common. Unfortunately, for buyers, that's a really hard pill to swallow. I wrote an offer last week for 60,000 over, no home inspection. It wasn't accepted. So yes, right now we're seeing offers anywhere from $2,000 to $100,000 over asking. And how do we navigate that? It's strategic. I'm telling my buyers to put their best foot forward, and that's through getting a strong pre-approval, having the lender call behind me. So when that offer goes in, you're going to be a strong pre-approval with Steve calling behind you. I am going to send you a list of comps, myself, Ron, or Ann, when we're looking at the houses. You're not good, and you are new buying a house, and you're like, okay, the house is $400,000. I'll offer $400,000. I'm going to dump a list of PDFs to you of all the sales prices in the last 6 months, which is when the market has seen an increase. So you can see what the market is really doing. Sometimes I'll even call agents that have properties under contract in the city or town you're looking at and ask, you know, how much over did you get, and see if I can get a ballpark. They may not be able to give me the final price, but they can give me some information. Putting together, sometimes a letter is in, you know, writing to the seller. And when you do a letter, I want it to be personal about the seller and not as much about you, because the seller really only cares about their house and their sale. And if you can connect with the seller on an emotional level, like if you're walking through the house and you see dog bowls and you have a dog, or you see a KitchenAid mixer and you have a KitchenAid, or you see this beautiful garden, you want to connect on a level that the seller is and tell them something that you're going to do in their house that they've obviously been doing. So a letter to the seller, a strong pre-approval with the lender calling behind you. Sometimes escalation clauses, but I'm seeing those. And what an escalation clause is the house is $400,000 and you want to go up to, you're comfortable paying $450,000. You might say, I'll pay $425,000, but I'll escalate over the highest offer up until so much. You cap it. It's like, you know, I'll escalate till $450,000, you know, at $5,000 increments, something big. You could put down a generous, Ian's going to touch on this later. I don't want to take away from that, but you can put down a generous down payment. Initial deposit. Usually it can be $1,000, but sometimes I say put $5,000 because it looks like you have more skin in the game. There's lots of tricks in the trade. How you handle home inspection, which we can talk about as well, is another thing. You know, you can do home inspection for informational purposes only. You can put money towards a home inspection by saying you'll assume so much. Steve, do you have any ideas on what people can do to strategize?
Well, I think you hit on all of them, Maura, and you know, as most of the panelists said to this point, you and your team have been so successful at this for as long as you've been in business, that all of the measures that you guys take kind of pre-offer kind of puts that client in the best position possible. But from the standpoint of what you mentioned, yes, this wasn't prevalent, you know, years or even months ago. But as you indicated, we have seen kind of an influx of the lenders calling this the selling agent, just to kind of give a positive spin on that client's pre-approval, because I think you'll find that different banks handle pre-approvals in different capacities, and that word means different things to different people. So when I get on the phone with the listing agent, I do my best to give them the kind of the list of what we've done to that point, including income and asset review, credit checks, the computer generated underwriting approval, which is kind of the paramount milestone to cross during the pre-approval. And I do my best to give them the illustration that they'll be speaking with me and me only, and that the client has already provided all of their information, and that kind kind of all the pieces are already in place. So, from that point, it's a numbers game. And if you're lucky enough to get your offer accepted, but between what you and your team do and the measures we're taking as lenders to make sure that the sellers are aware of how well qualified the buyers are, as well as what processes have gone into that pre-approval, I think that's the best we can do in this climate.
Yep. And I'll touch upon later about the seller's market and how that plays into the buyer's market. Good question, Walter. We have some more questions here.
Yeah, there's a couple of questions I can
see them actually.
Oh, okay.
I didn't think I could, but I can. Brenda
Okay.
Carlitis is asking, this is for Adeus. What is your thought? Well, I'll answer it too, but Adeus, you can chime in better. What is your thought about having a home inspection done before you put the house on the market? I think it's an excellent idea, and I don't think enough people do it and then are thrown off at the time of home inspection. But Adeus, can you talk about that a little?
So if I understand the question, we're talking about like a pre-listing inspection.
Yes.
I think pre-listing inspections are a really great idea. It does a couple things. One, it gets the seller sort of prepared for anything they're unaware of that they want to take care of before they list the house, or price the house accordingly if they don't want to fix it. It also kind of gives an extra level of transparency through the whole process. We do them often. I think it's great. I wish people would do them more often, but I do think it does provide that extra level of transparency, and it gets the seller more prepared. At least they know exactly what their house is, so there's no surprises when the buyer's home inspector comes in.
I agree. And I will say that not enough sellers do them. I've only had one seller in 7 years do one. But you know what? We were prepared, and she fixed a few things that were important. And when the other items came up at the time of inspection, we were prepared. And we can also tell we can choose to tell people that we've done an inspection, and tell them the things that we know about that could come up in an inspection. So I think it's a huge benefit, and I think it's great when people are willing to do it and spend the extra money, because we don't open up our electrical panels or our furnaces on any regular basis, nor should we be. I have a question for Steve, John Hannon. John, I'm glad you're here too. How do student loans factor in with pre-approval if they're in forbearance? What about when repayment begins?
Yeah, John, that's a great question. The student loan debt is something that needs to be addressed in the mortgage industry. It's not, every program looks at that slightly with some slight variance. The most simplistic approach is what Freddie Mac uses. Freddie Mac is one of the big mortgage entities that basically insures traditional mortgage loans. They have the most forgiving policy whereby under no circumstances, unfortunately, can student debts be omitted entirely from the qualifications. But as I said, Freddie Mac offers the most attractive policy where if there is not a payment that is due or reporting on your credit report, what they'll do is they'll take 0.5% of the outstanding student loan balance and apply that towards your monthly debts. So, I think as compared to what the payment would be once it's in full repayment mode, that's generally in line with what the actual payment would be. But that's where the industry is right now. There might be some modification to that if there's any cancellation of student debts. We don't know how that will play out with this administration, but hopefully that answers your question. So 0.5% of the outstanding student loan balance will be factored in as part of your debt to income ratio. Thanks for the question.
That's a great question. If we don't have any more questions, which we don't quite yet, please jump in and put your question in the chat when you have one. And I'm going to go back. Steve can stay on because let's see if we're going to answer some questions, and maybe these will spark other questions. A question for Steve is lots of buyers on their minds is, what are rates doing? Where have they been? Where are they going? What's the end of the year look like for us in 2021 with your magic wand?
Yeah, that's the $1 million question. And I think that lots of people would be more seriously enthralled in the home buying or refinancing process, I think, if there was some definitive answer to that question. But you made a really good point. In order to kind of get a sense of where we're trending, I think it's important to look back at kind of where we were, where we are now, and then I'll get into the projections for the year ahead. We all know that there were some pretty unprecedented events that happened in 2020 with unemployment being massive, obviously the pandemic, the kind of political chaos that we all watched happen, that traditionally creates uncertainty, and mortgage rates generally don't react favorably to uncertainty. But I think with the strong housing demand and some action that the Feds took, kept rates low fundamentally for the better part of 2020. Now, we did see some pretty wild fluctuation. In fact, in anticipation of this question, I looked back at the closings I had in 2020, and I was interested to see the spread between the lowest rate that I gave out. I shouldn't say that I gave out the lowest rate that was available versus the highest rate that was given that year. And the lowest rate that a client achieved was 2.5% on a 30-year fixed. That was a unicorn. For 2 hours of one day, that rate was available. And the highest rate was 4.125%. And again, not because that was a borrower that wasn't well qualified, just a matter of luck where rates are in that given day. So in such a short amount of time to have such a wide spread of interest rates that were available, it kind of shows where the volatility was in the market. But I think if you look at a snapshot on any one of those days throughout the course of that year, the rates that were available are generally considered favorable. I think for anybody in the audience or the panel that's had a mortgage, I think any of those rates that were available during that year would be looked on as favorable, and we'd all be happy to have them. So with that said, rates today, the last loan that I locked in today was at 3% on a 30-year fixed. So we've kind of stabilized a little bit with kind of all the volatility that we saw early on in the pandemic. But moving forward, the projections that we've seen, and I looked at a 5-year model. I'm only going to get into 2021, but the 1-year model indicated that the low rate that they projected would be 2.8% on a 30-year fixed, of course, and the high rate that they projected was right around 3.125%. So, you know, the small spread between those rates shows that the market has stabilized. It shows that there's still a strong demand in the market for mortgage lending, and obviously the supply and demand ratio in real estate shows that there's a strong demand for people to own homes. So I think it's a great time to be a home buyer. I think it's a great time to be a home seller, and certainly there's still opportunity to refinance. So the short answer to your question is it looks like rates will remain in the low 3s for the foreseeable 12 months.
That's still amazing rate.
Yeah.
Yeah.
It is. I mean,
Yeah.
it's easy to get blinded by your neighbor who got that 2.625%, and maybe you decide to wait to buy your home, or you don't want to sell because you're afraid of what rate you might get when that rate's 3.25. So again, if you look at the historic trend of interest rates, you know, not very often that you can see rates in the 3s. So if we're going to have that for an extended period of time, that's a signal of strength in the housing market.
Great. Thank you so much. Jim, what is title insurance and why do I need it? I can't tell you how many times this question comes up, because at the very end, people are saying, why do I have to pay another $1,000 or $1,200 or $1,500? I already have lenders. The lender already has the title insurance. Can you explain, and I know I have my own reasons, why title insurance is important and why people need it?
Yes, so there are two types of title insurance. There's lender's title insurance and there's an owner's title insurance policy. And the lender's title insurance policy is never optional. So when you buy a house or you refinance your house later, even if you refinance your house 3, 4, 5 times, which the rate environment that we have, we see a lot of people refinancing more than once, you're paying for lender's title insurance every single time you do that. And the title insurance for the lender protects the lender's security interest in the property, so that if there was ever a defect in your chain of title, there's a bad deed or a bad probate or an undischarged prior owner mortgage, which I'll talk a little bit about, the lender is insured for any losses that they incur because of that defect. Owner's title insurance is essentially the same thing, except it protects your interest in the property. And the lender's title insurance does not protect your interest in the property. So if, for example, you buy a house and the person that you're buying the house from has a home equity line, and say the home equity line has no balance on it, but it has a $100,000 limit. And that home equity line, after you buy the house, does not get closed. Maybe the attorney made a mistake, or they sent in the documentation to the bank to close it, and the bank never got the documentation. The account never gets closed. And then the next month, the seller goes out after you own the house, and he starts racking up charges on that home equity line. And now there's a $50,000 balance, and he doesn't pay the home equity line down, but there's payments owed, and that home equity line is still attached to your house. That lender from that home equity line can now foreclose on your house, even though you own it, and and you weren't liable on that loan. So owner's title insurance protects you against that. The lender's title insurance does not protect you against that. So title insurance is a one-time charge. You pay for it once and you have it for as long as you own the house. So that's one example. There's a lot of other reasons why title insurance could be valuable. You could have a bad deed. Say the person that you're buying the house from, they were married, but they said that they were unmarried, and you can't really prove that they were married. And the spouse didn't sign the deed. That means that the spouse didn't waive their homestead rights. And the spouse comes back later and she says, oh, you don't own the house. I had rights in that. And then they try to sue you. The owner's title insurance policy, the attorneys from the title insurance company protect you in court against that kind of claim. In other claims as well, Maura, you have some great examples. I believe, was it a probate matter that you had?
I had a probate matter where a seller purchased a home in the early 2000s, and they thought that they purchased the home and the lot next door, which was the driveway and basically the whole backyard, but they only got recorded was the house. And so their whole backyard with the shed, the garage, the driveway was not showing as a recorded. And so we went back and said, oh, this shouldn't be a problem. We'll just go find the owners. Well, and we don't have title insurance. Well, the owners were deceased. The attorney that did the closing was deceased. The real estate agent was deceased. One of the seller's adult children was deceased. We had to take to Facebook to try to find the kids. It was a long ordeal. My sellers had to probate a deceased person's estate in order to fix this problem that cost thousands of dollars. The buyer, we had to pay the buyer's rent. The rate lock was expiring, all of this because we didn't have title insurance. So, you don't, $1,000 or whatever the cost is, I don't want to quote what it is. It seems like, just another expense at closing, but I would say in every given year, I have 2 or 3 transactions that come up about title insurance. Something was not discharged properly, seems to be the common theme, but probate is another ugly thorn. And also we live in New England where we've had families sell off properties and land over the years, and that wasn't done correctly. And those are all issues that come up on title searches. And then we're stopped and the moving van is packed and everybody's upset. And if somebody had a title insurance policy, we would be generally moving forward. So I always advocate for title insurance.
Right. And then when you go to sell your house, is generally when title insurance becomes the most valuable.
Yeah.
Because if there was a defect from before you bought the house, that protects you when you go to sell it. So the buyer's attorney who's handling the transaction when you're selling, they'll ask you for your title insurance policy. You give it to them. And 99% of the time, that's your golden ticket to close, because that will protect the buyer's title insurance company. It will indemnify them against any issues from before you bought it. And things get missed all the time. There's a lot of moving parts when you're buying a house. Title examiners will review the last 50 years of the public records for your particular property when you buy it. And you can imagine how many documents get recorded in 50 years against one particular piece of property, especially if it's been exchanged multiple times. Things can get missed. It happens all the time. So that one-time charge when you buy the property can be invaluable when you go to sell it.
I totally agree. 100% support that. Okay, thank you, Jim. Next, Adeus. In this market, if you're watching the channel 5 o'clock news and all of the hype about what's going on with home inspections, buyers are waiving home inspections. This has always been a little bit of a trend. This is a huge trend right now since the pandemic and since there is such a shortage of houses. I am a firm believer in home inspections. As a buyer's agent, it is your number one thing to protect yourself about buying a house that could have a very potential serious problem. There are ways to work around, the home inspection in your offer that we can structure, but I want to touch upon, Ardeas touch upon why it's valuable to have a home inspection of at least some sort.
Sure. So as most people know, the home is most people's largest investment, and it's a long-term investment. So I believe it's very important to get into that investment being as well educated about it as possible. There are a lot of issues that can come up. There are things that might need to be repaired that are, high-end, expensive things that need to be repaired in the home, health issues, safety issues. And the point of a home inspector really is not to convince you not to buy that house, is to prepare you to understand what the situation of the house is in and factor that into your decision. And then you can talk to your realtor if you want to negotiate it, if it's something that you're okay with. Worst case scenario, you continue looking. But more often than not, what we do is we educate you. We give you some solutions. We can give you solutions, some simple solutions for most issues. And from then on, you talk tomorrow, talk to your agent to figure out what you're going to do with that information. But it is what gives you that peace of mind, so you know that all this money, all this effort that you're putting into this home, you're not going to have some unexpected issues that are going to come up. For instance, we just did an inspection. It was last Saturday on a new construction, beautiful home. There really wasn't anything significant at all. And then we did a radon. The radon, anything about 4 picocuries, the EPA recommends that you have it mitigated. This house had a 19 picocuries. So it's very high, and radon's the second leading cause of lung cancer. Now that can all sound very scary, but it's a $2,000 solution that brings it right down. Again, we gave the buyer this information, and since it was a new construction, it was very, very easy for the building company to go in and solve it. So there are examples like that where we're very glad that we were able to do the home inspection. It was an easy solution, and then the buyer, it was a very expensive house. They're going into it with a lot of peace of mind, and I think that peace of mind, they're going to be in that house for a long time, and you understand it. That I think is the highest value of that home inspection.
Thank you. I really think that that's important. The value a home inspection brings, and even if it's education, like where the water shut off is, where the electrical, where the meter is, things that they need, where's the gas shut off, just things that if you never owned a home, you need to know.
Absolutely.
Thank you. Okay. I have a question from, let's see.
Did you see the questions, Maura?
So this is from Brenda. If the house you are buying is vacant and you have a 2 or 3 week time period between selling your home and closing on your new home, is it ever possible to rent the new house before moving in? Is it frowned upon or discouraged? Just curious. Okay. Yes, you can rent that. Are you asking, Brenda, can you unmute yourself for a minute?
Yes.
Thank you. So what I want to follow this. So if the house you are
Okay, so
buying
if
is
my house, so if I sold my house and
Yep.
I physically have to close on my house before I can buy my next house.
Yep.
So if the closing, I'm already in agreement and whatever with the other house. So if my closing date comes, but there's going to be like a 2-week time frame between the closing of my selling and the closing of my buying of the new house, and the house was vacant, is it possible to rent from the future house that you're going to be buying to
So
prevent you from having to go to like a hotel or
a
something?
hotel. Yes, I'm gonna have Jim touch upon this. You're not gonna be closing, so you're not paying for the house. So it's not really, you'd be asking to rent. Jim, would you recommend a use and occupancy?
So my speakers broke up a little bit
So
there.
she's saying her house is for sale in Peabody and she's buying a house in Western Massachusetts, and her house isn't closed, and the house she's buying, it's a vacant property, but she doesn't own it yet. She hasn't closed on it. Could she rent that? could she do a use of occupancy on a place that she hasn't bought?
You can do it. The seller's attorney will be the one really making the determination about whether they're going to let you do that or not for the house that you're buying. And they may be weary of that because, especially right now, we've had a lot of issues in the last year because there's an eviction moratorium. And if you were to move in there and if something were to happen and you couldn't sell your house and you chose to squat there, it would be pretty easy for you to stay there for a while without them having a chance to make you leave. So in short, you can do it, but there's always that risk for the sellers. Not that you would ever do that, but it's a risk. I mean, there's no real good answer. I mean, it's a case by case basis.
We're just trying to come up with options. We have nothing. Our house isn't even for sale and we haven't even looked at houses, but we're just trying to come up with, because we know we have to sell our house first because the money from the sale of our house is going to be used for the down payment on the next closing. So it would kind of be from like right about when we're closing on our house. You know, that's only if, you know, it's a perfect storm. The other house is vacant and who knows, just a thought.
Here's an idea that I'm going to talk about later, but I'll talk about now. You could put your house on the market, Brenda, in Peabody. You could sell it. You could look for a buyer, which there's plenty of them right now, who would allow you to rent back for a period of time your own house, which is far more.
Yeah. I knew someone who did that. That would be my first option because let's face it, I already live here.
You already live there, and there's buyers that are rent. Your house is probably could be a first-time home buyer. They're renting. They live with mom and dad. They're in, you know, they can give you 90 to 120 days to stay in your own home. Your home sale contingency has now been dropped, and you are now a cash buy. You know, you're actually a buyer with, you know, money to put down and a good down payment and all of that, and you should have no problem buying another house. That's the way I would go, because the other way, as Jim said, the seller's attorney is going to be like, as a seller, like imagine if someone moved into your house and they hadn't bought it and they decided they didn't like it.
That'd be bad.
Like,
And there's also the home insurance piece to consider in that regard. You know, whose insurance would be liable for an event of any loss or theft or things like that. So also a consideration.
I would try the rent back, and I think you'd be fine. I think you'd be hugely successful with it here in this market right now.
No, thank you.
You're welcome. Kara has a question. If you do a home inspection before listing your house for sale, can you provide the potential buyer with the report so they can turn in and waive the inspection? Yes, you can. If the seller has purchased, the report belongs to the seller, so the seller determines what they're going to do with it. Whoever buys the report, buyer or seller, can do what they want with that report and share what they want with that person. We're seeing a lot of waived inspections. So, you know, especially if it's a condo, which I know you own, Kara, there's less and less. That's where I'm seeing more waived inspections than anything, because the general maintenance falls to the association and not the interior. You know, if the roof is older or the windows are older, usually that's all going to be the association issues. But you can absolutely share with them if you choose to, and it can be a good tool. Okay. Any more questions, or should I continue on? Okay, we'll continue on. Oh, did I miss Ann? No, Ron, why is it valuable to build relationships with other realtors and maintain a solid reputation in the real estate industry?
Thanks for asking, Maura. I love this question, actually. So I have clients that, you know, are concerned with, you know, why is it so important for me to maintain a relationship with a seller's agent if I am the buyer's agent? And quite frankly, you know, we do business with people we like. And, you know, whether it's Adeus or Steve or Jim, we surround ourselves with people we like. So why not, you know, why not enter a transaction with great rapport and familiarity with an agent that, you know, you're trying to build this kind of trust with. So I have, like I said, I have clients that will, you know, ask me why do I spend so much time calling these agents, or or trying to, have conversations with them about what we're trying to do as buyers. And it's because it can only help our situation. I'm very careful not to divulge any, personal or financial information about my clients that we shouldn't give, but in the same sense, it's relationship building, and it helps on every single transaction, whether the buyer can see that or not. I try to help them to understand. So it can tremendously help the deal, in my opinion.
Absolutely. I think that's great advice. And I think it's really important that I know that Ann, Ron, and myself, we all reach out to the other agent on the other side to ask them, is there something that the seller wants, is looking for in your offer? It's another thing, what does the seller want? By Ron having a good rapport with other agents, he's able to find out what's important to sell. Maybe they want a quick close. Maybe it's an emotional sale and a letter is going to help. So by building that rapport with another agent, they're able to, make a better connection for your offer to get accepted. Thank you, Ron.
Thank you.
And I know I kind of rained on your parade, but what are some tips you have to have your offer stand apart in the sea of offers that are sellers are getting?
Well, as you mentioned, the first thing that that I do is I always call the seller's agent, because like you said, it's important to find out what the sellers are looking for. If they are looking for a quick close, maybe that, if a rent back is something that is important to them, or, if there's a big emotional attachment. So that definitely will sort of sway what we want to do with the offer. So there are a couple of different things that we can do. When you put in an offer, you put down what's called your earnest money deposit, which is your initial deposit. And that is normally anywhere between $500 and $1,000. And it's just showing the seller how serious that you're a serious buyer. So by increasing that, sometimes that can, be pleasing to the seller to see a higher earnest money deposit. We can put down $2,000. It comes off of your second deposit. So, it really doesn't matter. It's just a couple of weeks beforehand. So that's something that we can do. Maura had mentioned the home inspection. Sometimes we waive the inspection if the client wants to do that, but it's not something, again, that we recommend, because it's a little too risky. But we can do normal inspection period is like 10 days. But if we do a shorter inspection period, that is sometimes helpful as well, because if for some reason you find the inspection, uncovers something and you want to back out of the sale, if you only have a 3-day period for your inspection, then the house is only off the market for 3 days, and then they can put it back on the market. Whereas if we have a 10-day inspection period, the house is going to be off the market for 10 days. And that's, so sometimes we offer a shorter inspection period, or we'll say that we'll assume the first $5,000 in repairs. So that's something that we can do. The closing date, if there's a way that we can be flexible with the closing date, if that's something that the client is looking for. There's also waiving a mortgage contingency. That's if you're paying, the house is $400,000 and you said, I'm gonna pay $500,000 for this house. And then the appraisal comes in and the bank isn't gonna lend you that money. So in order for you to, be able to pay that amount of money, if you can't get a loan for it, if you're waiving that mortgage contingency, then you agree to come up with that cash to close that gap. So that's something that, especially in this market where the houses are going so far over asking, a lot of people are doing that. And if you, trying to explain it a little bit, so if you, more help me out here. I'm trying to explain, like if you don't do the mortgage contingency, then sometimes the seller will have to drop the price of the house. So that's why it's.
Yes. So if the house doesn't appraise, so the house must appraise for purchase price. And
Right.
Yes, there you go. And if it doesn't appraise for purchase price, then it's a negotiation. Will the seller come down? It's
Or
appraised or not. Seller has to come down. You can meet in the middle, or you may be asked to come up with the whole difference.
right, exactly. So if you're waiving that, then obviously that's really enticing to the seller. But again, you have to be willing to pay over what the bank is determining is the value of the house, and you have to have that cash on hand. The escalation clause, which Maura talked about already, going over putting in an offer and saying that you'll pay up to a certain amount over the highest asking price. I mean, the highest offer price. The personal letter to the sellers that, you know, is definitely, we sometimes put a picture in of the family. And if you have a dog, like Maura mentioned, if you have a dog, you mentioned, if you see that they have a dog or something that will, you know, that puts you, sorry, I'm totally like losing my
That's
thought
fine.
here. Rent back, we talked about the rent back. We talked a lot about that, so you guys kind of understand that. But there's other little things that we can do, but these are sort of the major factors that, you know, and we go over all of that before we put the offer in. And I also always go over exactly what an offer looks like as soon as I meet a buyer. So that way, when we do put an offer in, they already know sort of what to expect, what the earnest money is, when the purchase and sale is, and all the different dates and stuff. So that's something that we do as well.
Awesome. And absolutely, that's one thing Ann does. She gets on a Zoom call with the buyer and she will share her screen and show you what an offer looks like. So, you know, because otherwise you're getting all this documentation thrown at you and you're really excited because you've like found the house. You're going to put your offer together and you're like, okay, I'm just going to click away. And we don't advise you just clicking electronically away on documents for hundreds of thousands of dollars. So by Ann reviewing these with you up front, you know what you're signing. And also, one thing I want to say is that we have other tricks up our sleeve too, and we're happy to discuss those. You know, we will get it as crazy as you want us to get, but we're always going to defer to our buyers because it's your purchase and your money. I mean, you know, our job is to secure the property for you. So, you know, if you want to waive all your contingencies and you feel good about that, we will support that and write that offer, but we're always going to advise you and give you the full picture. So you're happy to talk to Ann, myself, or Ron about more tricks that we have that we all know. But again, we always defer to you and what you're comfortable doing. We'll tell you what the market's doing, but and where we're seeing things go. But again, you're sleeping at night, you're taking out this loan, you're purchasing this property. This will be probably one of your largest investments. So we care about you being happy in that home. And, you know, this is a relationship that we're forming with you, and we hope that you continue with us for years to come. I see we have another question from John. Well, this is a good one. What factors will change the market so that houses are not selling for so over asking? Not much. Okay. So the reason it's really pathetic right now is, okay, it's February, and I can't believe like Channel 5 is doing a news story the other night. I actually couldn't watch it on the housing market, and lines snaked around the corner and hundreds of thousands of dollars over asking. Because this isn't usually what it looks like in February. You know, we don't usually have people beating down the doors for homes, but we've had a notoriously low interest rate year, so people can borrow more money. We have had no senior citizens selling homes in all of 2020 unless it was an absolute reason to, because we're in a pandemic. So you're not opening up a house to an 80-year-old to parade people through. So no seniors moved, and those are first-time home buyer houses all the time, all day long. So we've had no seniors move. We had people having an opportunity to live a different lifestyle because of the pandemic. What does that mean? I no longer like living in a 400 square foot studio, and I want green grass. And Ipswich is now a beautiful place to live. Oh my God, so now everyone's parading out of Somerville and they're going up to Ipswich, and this looks like they've been paying $4 grand in rent, and this mortgage payment doesn't look much. So it's driving the market up. People, it's a pandemic, so people don't really want to move as much. You know, I don't really want to have people in my house, even with all these precautions, exposing my children possibly to a virus. So there was less people moving. There were no elderly people moving. There was less people moving. And we had historically low interest rates. And we had a lot of people who wanted to move. Like, I don't like my condo. I don't like my living situation. I want my parents to move in with me. I saw a lot of movement around in-laws this year too, which is different. But it's also February, and it's why I don't want people to panic. People don't want to move in February. People do not want people coming through their house with salt, sand, onto their hardwood floors. people don't want to put their kids and dogs in cars and drive around for open houses for 8 hours, while people are in their house. There's still a virus. So I do think that with the more vaccinations being rolled out, that senior citizens will start to slowly move, hopefully this summer or fall, with children, adult children feeling it's safer for mom and dad to move. And sell their houses. That should open up some things. Rates will still stay low, so it'll be attractive for people to sell and buy. I think people will get a little more creative. Agents are getting very creative, like on the rent backs and things, which will ease up sellers' stresses about listing their home. And the more homes we get, John, the better your chances are of the amount things are going for over asking. I don't see a trend of us like not going over asking, but the grossly over asking, I hope settles out or shakes out come, hopefully we get a busy spring market with a lot of houses on the market, people willing to move again. They're feeling more secure and safe. That's what we need. The most thing we need is houses. It will start to lower when there's more houses on the market. I hope that helps. And my question is, I want to sell my house, but where can I move? The market just seems so difficult to navigate. And I get this a lot. I actually have a lot of sellers sitting on the fence right now, and they don't know how to navigate this market because what John just said, like things are selling over asking, there's no houses, where do we go? And I'm basically telling, I'm a straight shooter, and I don't like to lead people on. There are many options when you sell your house. But again, sitting down and putting a plan together is super important. I believe this is going to be the year of the rent back. I believe many attorneys will be doing use and occupancy agreements. I believe there's many first-time home buyers that will have the ability, because they're in a tenant at will lease or something, that they can offer a seller a period of time to stay in their house. That would be the best thing in a lot of situations where you have cash in hand and you can eliminate your home sale contingency. So you're gonna live in your own house. You probably have to pay their mortgage payment, but they will be owned by someone else. You'll have attorneys drafting up an ironclad use and occupancy agreement. And you now can go out and you have no more home sale contingency, and you have the equity or whatever you've gotten that you're gonna put down for your down payment. Another is sellers to find suitable housing. Again, you're going to get a probably 4 months is generous, but 3 months at least usually period to find a house. You want to hope that when I'm looking to accept your offer with my client, that we're going to shorten that purchase and sale and that finance. Steve loves me. Finance days. We're going to get
Whatever you need.
We're going to tighten up those dates really close, because once you get that P&S signed, your chances of getting an offer accepted on the other side go up. Once your mortgage contingency date, your buyer's mortgage contingency date is secured, your chances of getting your offer accepted are better. So if you're a seller and you're going to do, you got a buyer that's going to give you 3 or 4 months to find a place, we want their offer really tight. We want those dates as tight as we can. Sort of, because we want to close. We want to, I don't know, we want to get through P&S. I'm really wrong about the mortgage contingency because we're pushing the date out to close. And we have to watch rate lock. So 90 days would probably be all we could do because a buyer has to lock a rate. Another thing is you have to have a plan B. You have to, if things don't go your way, then you have to have a plan to go live someplace else. Or the buyer can close on a contract, and you should have storage unit lined up. You better have in-laws, parents, or a rental. And if you have pets, and make all those arrangements, that's why the plan needs to be put together. When I work with seniors, which I do a lot of, I hope to do more this year, I really get a really tight plan on selling their house. Ideally, I'd like the senior to move out of the house before we list the house, because it's very stressful. If we think selling a house in our 30s, 40s, and 50s is hard, become 90 and try to move 30 years of stuff out of your house and have strangers walking through, and you don't even know what a home inspection is, and people are telling you there's something wrong. So I like to have my seniors move out, if all possible, to whatever living situation they're going to, families, another condo. And a lot of times they can take the equity out of their house. So sometimes seniors can take the equities out of their house, and then go purchase another house or use that as money to pay for an assisted living or whatever independent living facility. What else is there for ideas for selling? I just thought of something. Steve, do you have any ideas?
Well, not for selling, but I did have one thought that I wanted to kind of add relative to what specifically Anne was talking about and some things that you and Ron also mentioned in terms of separating a buyer from a pool of 100 other buyers. We talked a little bit earlier about a traditional pre-approval, a pre-qualification in some cases. Maura, you and I have done this once or twice in the past where we issue a pre-commitment. And basically what that is, that allows you as the buyer's agent to tighten up your dates a little bit and kind of stand out from the pack, in that the difference between a pre-approval and a pre-commitment is that a pre-approval is a non-binding assumption that your loan will be approved based on the data that's been reviewed. A pre-commitment is when you actually formally apply for your mortgage loan. You have that underwriting approval in place based on a to be determined address. So effectively, a live underwriter is going through your bank statements, your credit report, your income documents, and you have that mortgage commitment in place before you even make your offer. So just the thought that's out there, that is a little bit of a lengthier process to an extent on the front end, but it bears incredible dividends on the back end, if it helps you stand out from the other buyers.
I like that. I just thought of my two things, and this actually plays into Steve. Another thing, some dual income families may be able to carry 2 mortgages, right, Steve?
Absolutely.
If you're able to carry 2 mortgages, here's a scenario which could work this year very well. You go out, you find your house, the day your offer is accepted, and the day the P&S is signed, you list your other house. By the time you close on house number 1, you have, if you close in May, your first mortgage payment isn't due July. Your other house in this market should be gone before your first mortgage payment. If we do it right and we line it up and we put that plan together, you could do that if you qualify. Another is if you have enough equity, if you own your home outright, you can take the equity out of your home and buy another home and then put your house on the market. Same scenario. If you've got that, you can, as soon as you get the purchase and sale signed on one, put the for sale sign up on your primary residence. We should be able to line them up pretty closely in the market that we are currently in. Okay, I think who has questions? Because we have actually done over an hour. So are there any questions that we can answer for you before I move towards the end? Is there anybody else who has something they would love to ask us? Okay, I think we're good. Okay, I'm going to do the raffle. So Anne so graciously put together this beautiful basket. And so it's going to be snowing. So maybe we'll deliver it tomorrow. We'll see how much snow we have. We've got plenty of wine.
There is one quick question.
Oh, what's the question?
General step-by-step list that you can give us.
For which?
Asking.
I lost my chat.
It said, is there a general step-by-step list that you can give us for
buying or selling?
Buying.
Right,
So
yes,
I go get approved, then I go find a house, then I go hire the home inspector. I don't know.
Yes,
Yeah.
we can get on a Zoom call and do that. But yes, the first things first is you get pre-approved.
Okay.
And then you go to a realtor. And then we discuss what you want to do. We do the fun thing. We go shopping for a house. We get your offer accepted. We have a home inspection. Your life is turned upside down for 2 full weeks. And then everybody stops bugging you and you think something's wrong. And then 3 weeks later, you buy a house. It's really easy.
we have a pamphlet, a booklet that we'll give to you that goes over everything.
Yep. And actually Anne, Ron and I were just actually reviewing a how to get your offer strategy, a buyer, which we had done today. So we'll be sending that out too. Emily, I'll email you our checklist. Okay, I'm going to pick the winner of our basket, which I lost the picture. And I have do we have a Johnny Long on the phone on the call? Nope. Oh, Jared Bowers. Did Jared come? No. Matt Schroeder, are you still here? Matt was here, but he's not on the call. Matt?
Nope.
Oh, you had to stay to the end. Brenda Karolidis. You in the basket.
And I am still here.
You are still here. You get to, maybe I'll even bring that over for you tomorrow.
I'll be here all day.
Oh, that's awesome. Well, I just want to have everybody, I want to have Steve, I want to thank everyone for staying and being here and participating. I really appreciate it. I hope we could answer some of your questions. I want Steve, Jim, and Adeas just to give their contact information out, how people can get in touch with you.
Yeah, absolutely. I'm permanently in front of my email. That's my first initial, my last name. So slewis@drewmortgage.com, and that's DREW. And cell phone 781-706-1145. Thank you.
My email is Jim, Jim, @standardclosing.com with no S, that's singular. My cell phone is 978-857-4207.
Yeah, my email, Adeas, ADAIAS.SOUZA @pillar2post.com. And my phone number is 978-338-3211.
Thank you. And I actually found our contact, I got my screen back up. So all of our contact information is up on the screen. And I just thank everybody. Thank you, Steve. Thank you, Jim. Thank you, Adeas. Thank you, Ann and Ron, for joining. And thank you, everybody, for participating. And please feel free to reach out to us at any time. My contact information is ma@marallardrealtor.com. And, or you can just reach out to me through Facebook as well if you don't have my contact information. So thank you. Have a great evening. Stay warm.
Thank you so much.
Thanks, Emily.
everyone.
I'll email you.
Everybody.
Okay, great. Thank you.
You're welcome.
Night, everybody.
Good night.
Bye.
Bye-bye.
Mara, do you need my address for that gift card or
I do, Marby. What's your address?
it's 17 Hilltop Drive,
In Beverly?
Beverly, Mass. Yep.
I'll throw it in the mail to you tomorrow.
Great. Thank you. Thanks for
welcome.
this. It was good.
You're welcome. Take care.
You too. Bye.
I'm coming.